All right. Good evening, everyone. Thanks so much for joining. I know it's a Sunday evening, and I know that we're heading into kind of like summer at the moment, and so your time is much appreciated for joining me on here. I haven't spoken any time at all over the last maybe 2 or 3 weeks around the markets. However, in my Discord group and across Instagram, there have been a lot of questions that I've received around how do we navigate the markets right now? It feels as though there's been a lot of investors move into the markets over the past couple of years, certainly through the pandemic, and they find themselves in very new territory. And this is familiar territory because we know that the markets are cyclical. And so, in having this conversation with you guys, I wanted to lean on the expertise of someone who does investment management and is a chief investment officer, and has done this for a while. And so we're going to have a conversation about the markets right now, mindsets, a whole host of things essentially. And this is the chief investment officer at Wealthify, who have been sponsors of this channel for the last few months now. And so I thought this is a really nice kind of like partnership for us to have a conversation about something that is quite topical. So I'm going to bring on Colleen in a moment. Now, I met Colleen maybe 4 weeks ago. I've got a really interesting video coming out on Tuesday where you're going to hear a little bit more about her. And one thing that really strikes me when I met her was her enthusiasm for investment. And I'm sure that's going to come through in the conversation that we're about to have this evening. And I hope at least, and I'm sure that you'll be not just informed and feel a little bit more knowledgeable after the conversation we've had, but I'm sure her experience is going to shine through as well. And I can talk about this kind of stuff all day. So we're going to try and keep it as brief as possible. But I want to welcome Colleen onto the stream. How are you, Colleen?
P, I'm great, and thank you for having me. Your poor audience, you think you can talk about this all day? Whew, you haven't heard me get going yet.
I know. We met in. I'm not going to say the location just yet because I'm going to give
Yeah.
away a bit of the video for Tuesday. But yeah, the way you spoke about investment, I was like, okay, we could talk about this for ages and ages and ages. But for the benefit of viewers, can you just give an introduction to yourself, what you do, please?
Yeah, no, absolutely. So my name is Colleen McHugh. I am the Chief Investment Officer at Wealthify. I'm in that position as an intern basis as we look to fill it permanently. Prior to that, I've been an advisor to Wealthify, to the investment committee now for the last 3 years. I've been managing money, Pete, good 25 years,
Wow.
and managing money anywhere sort of from the retail investor up out to sort of big institutional money. Managed various different asset classes, be it equities, stocks, and more lately venture capital. So the whole gamut there.
Wow. So I know I've asked you this before, and I had the benefit of the answer, and others will on Tuesday if they're not tuning into this live right now to capture it. But how does it happen for you to get to a chief investment officer? How does that? Because naturally, most people don't have a progression, a normal progression into these types of roles. How did it happen for you?
Yeah, I mean, as I said, so I've been in the industry for the last 25 years, and I started off actually in a sort of a middle office, back office in a stockbrokers, and through various exams and experience, built that out over 25 years. So I went from middle office, back office to trading. I did trading for a couple of years. So when we closed the floor, the stock exchange floor where people used to buy and sell across the desk, to electronic trading, to managing money, then, as I said, over the last sort of 20 years plus. And it was just a natural progression. Yeah, just pretty much natural, Pete. Yeah, and a lot of sort of a lot of exams along the
Well,
way as well.
I was going
Goes
to
without
say,
saying.
how many exams does it take you to get to there?
Okay, so first of all, I'm a bit of a nerd. Just
Okay.
so this may not be the exact path for everyone, but I've pretty much been studying consistently and since I left uni. and I graduated in '98. So,
Wow.
uh,
Okay.
yeah, with one thing or another, and that's the beauty about investments, right? I mean, I've been working in the industry for the last 25 years. I have a level of confidence that I know what's going on, but I don't know
Mhm.
everything because you're constantly learning. It's
Yeah.
certainly a profession, if anyone's interested in it, that no one day is the same, and you're constantly learning, and that in itself is, I think, you know, interesting.
Yeah. So it's a very, very long time. The way I always explain this to people is it's kind of like being a doctor, right? You're always consistently trying to keep up with new techniques, new developments, so on and so forth. What do you study at uni as the foundation into this? Because that's the question I get asked all of the time. What should I go and study at uni?
Sure. Well, I studied economics.
Okay.
And that for me, so at the time, look, I knew, again, being a bit of a nerd, I knew, I think, from the age of 11, when I happened to watch a movie that I shouldn't have been watching at the time. I was sitting on the stairs, completely age inappropriate.
Can you say what the movie was?
The movie is called Trading Places, and it
Okay.
was very, I mean, yeah, it was definitely not appropriate for a 10 or 11-year-old to be watching it. But I was fascinated. Derivatives trading oranges. For me, oranges,
Mhm.
like drinking orange juice. I didn't know that it was a. So that got me hooked, and yeah, I was very interested from an early age how I could, what I could do to get there. And economics for me opened a lot of doors because it's very general. But it gives you enough of experience, or certainly enough of knowledge, if you do want to specialize. And that's the other thing. I mean, I remember when I started out working, I started working on as I said, in sort of middle office, and I quickly moved into a trading desk arena. But a lot of the people I was sitting beside, a lot of them hadn't been to university, or if they had, they didn't come from a finance background.
Mhm.
So that was interesting as well. In fact, I nearly envied them having more of a broad-based sort of education, classics or
Mhm.
psychology. I mean,
Mhm.
psychology is massively interesting,
Yeah.
massively
Yeah.
relevant for the markets. We might get into that in a bit,
Yeah.
actually.
Yeah. Yeah.
Yeah, but so I would just say to your listeners, look, there's no one way, one size fits all. Certainly, economics is relevant, but I think it's a lot about mindset and having a good work ethic, because you will be working long hours. You will constantly need to be reading and improving yourself, and being up to speed. So have a good work ethic, a good work ethos, and be good with people.
Yeah, I think that's the main thing, and it's interesting you say be good with people. When I was advising, one of the firms that I worked in was very, very, very successful, and the lady had a phrase that she used. She goes, "We're people who just happen to manage people's money."
Oh, very good.
And her take on that equation was, oftentimes in the profession, people look at the money at the central thing, being the main thing, and that management overtakes the importance of the person. She goes, actually, it's the opposite way around. You understand the person, you understand what their goals are with that money,
Yeah,
which makes the things that you do for them more meaningful, so on and so forth.
yeah,
And that's always stuck with me
yeah,
over the
absolutely.
years, because it's true. This is all about people at the end of the day. People
Yeah,
work
yeah,
for their money and they want it for a particular reason.
yeah, and it's very personal as well, Pete.
Yeah,
Mm,
absolutely.
mm.
So, how are you finding the market at the moment? There's a lot going on.
Oh my goodness, wow. So again, it helps that I have a bit of tenure. I've seen this before. So I'm certainly not blasé, but it gives me a little bit of perspective. Um, I mean, look, um, if you pick up any piece of media at the moment, it's recession, recession, recession.
Hmm.
You've got people like Larry Summers, former Treasury Secretary in the US, a famous economist. You've got Elon Musk. You've got Jamie Dimon. They're all saying that a slowdown is imminent, and they're 100% right. I mean, I say that with some certainty. There is 100% a recession coming, and I can say that because recessions happen probably once a decade.
Hmm. Yep.
Recessions are they're part of the business cycle, unfortunately. Now what we need to consider is, well, if there is going to be a slowdown, what does that look like? Obviously, we had one in 2020. We recovered quickly from it. Um, but what does it look like right now? And And there's a lot going on. I mean, obviously, we have that dreadful situation in Ukraine. Um, it's massively impacting food and energy prices. It's hammering disposable income levels around the world. You've got the ongoing situation in China with COVID, which impacts supply chain issues,
Hmm.
which is inflationary. Um, and you've got central banks at the moment now scrambling to deal with inflation. And how do they deal with inflation? Well, they raise interest rates. They
Yeah.
raise interest rates. So look, there's a lot going on at the moment for sure. It's storm clouds are gathering. Uh, what Jamie Dimon and Larry Summers, etc., are saying, definitely be. We just don't know what's going to happen. We are seeing a lot of certainly the bad news already reflected in stock markets, and I know you've been telling your listeners about that, and we were talking about this earlier. But already a lot of the news is being priced into stock markets. I guess, Pete, the question, and it's one, listen, I'll hand it over to you as well, because you're watching markets as much as
Mm.
I am. I mean, are stock markets now, even considering the decline they've had year to date, are they pricing in further downturn?
Yeah, I mean, that's a really good question. And the answer to that is I don't know. I mean, I think a lot of this stuff is priced in when you see the news go out. What I
Yeah,
think is really, really striking to me, guys, is that the whole inflation equation is almost like this really, it's a double-edged sword. Because you're right, you raise interest rates to combat inflation, but then inflation seems to be appearing in all kinds of different ways. So we've got, food prices, we've got energy prices, we've got fuel prices. So it feels as though the impact of that isn't just in one single avenue. When you look at your household income or household disposable income or lack thereof, it's it's more broad than that.
yeah,
And unfortunately, interest rate rises aren't going to help you with the cost of fuel and the
yeah,
cost of your energy bill.
yeah,
And the trouble, I guess, for monetary policy is, well, if the numbers out of the states are 8.6, as reported this week, and we're at 10% here in the UK, double figures, probably going to go beyond that. You can't, as a central bank, just go and increase interest rates from 1% to 5% overnight, because that's going to be too painful. So, I mean, how do you see the whole inflation equation at the moment?
yeah. Listen, it's a real conundrum. Look, before I get into that, there is one thing to say about inflation, though, because inflation per se doesn't actually impact corporate profitability. Okay,
Hmm.
what's happening is, or what the impact is, that inflation causes central banks to raise rates. That very notion of having to raise rates causes economic uncertainty and volatility, and that's what impacts equity valuations.
Hmm.
Because if you think about it, how do you value a stock? How do you value an equity? Well, you're valuing it on future cash flows, and you're discounting them back to the present.
Hmm.
So if rates are going to go up, then that's not a good place for equity. So it's within that background, or that sort of, against that background, Pete, that you're seeing equity markets perform negatively, and indeed not just equity markets, right? Fixed bonds are being, bonds are supposed to be our safe haven.
Yeah.
Bonds are the classic diversifier in portfolios where you reduce risk. But look, let me come back to the question, because it's really valid, right? So we have a real conundrum at the moment. We have a situation where, as you've said, inflation is getting out of control. It's as bad now in terms of levels than it's been since the 1970s. But
70s. Yeah.
hold that
Yeah.
thought, hold that thought for a moment. But it's a slightly different situation. It's a slightly different inflationary picture across the world. So you mentioned the US. Yeah, you're right. 8.6% with the latest numbers coming out there. The inflation picture in the US, though, is very different to the UK and Europe. In the US, it's as much about supply issues, which is
Hmm.
causing a spike in inflation, as well as demand side. So it's your classic inflation story, and why raising interest rates will work. Interest rate rises will quell inflation if that inflation is demand driven, i.e., it's because the world economy is so strong and we're buying cars and we're doing this and we're doing that. Raising interest rates helps there.
Hmm.
The UK and Europe, completely different situation.
Hmm.
Our inflation is mostly supply driven inflation, meaning unfortunately what's happening in Ukraine has an impact on oil, on energy, on food prices. So it's beyond our control. The situation in China is having an impact as well. Um, and the question is, and it's a conundrum for central banks, or the Bank of England, you raising interest rates to deal with inflation when it's mostly supply driven, to your point, isn't actually going to really
Yeah.
help the situation.
Yeah.
But they've got nothing else, right? They
Yeah.
have to do something. So
Yeah.
so they have to raise rates. They're stuck between a rock and a
Yeah.
hard place, and I'm afraid rates are going up. It's the question is how much.
Yeah, it's an interesting point you make about the whole. It's if it's demand driven, it's easy to quell because I think the general thought train behind that is if you raise interest rates, people are less likely to be spending their money. They'll hopefully keep it, and that then reduces or impacts demand. Whereas you're right, if it's supply chain, that isn't necessarily linked directly to demand. So you increase the interest rates, the supply chain issue is still the problem where you haven't done anything to solve the actual core problem, but you've made it difficult for people when it comes to the interest rates that they're paying on their mortgages, on loans, on liabilities, that kind of stuff. So it then further tightens the belt when you think about the bigger picture itself. And I think for many people who are maybe watching this and will watch this in replays, you made a really interesting point a little bit earlier on to say that recessions are a normal part of this business. Markets are cyclical, if you will. Um, do you do you think the way people approach this and think about it is important to the ultimate decisions that they make moving forward?
Yeah, I mean, listen, it's very easy for us. I mean, you've worked in the industry, Pete. I work in the industry. It's very easy to sit back and say, hey, um, we've seen this movie before. We know how this plays out. And how does it play out? Well, the central banks continue to raise interest rates. They raise interest rates to such a level that they do cut off growth. That's ultimately what they need to do. And from our perspective, as if you're working in the industry, as I said, you've seen it before. You have an idea of what to do. It's just the vast majority of people haven't, and
Hmm.
it's how they react to it. So, as someone working in the industry, managing money professionally, for us, it's all about strategic asset allocation. It's all about diversifying the portfolios, having different asset class, having a mixture of equities in different regions, um, and of course, though as any investing, I'm looking at your disclaimer there at the bottom. Um, you know, with investing, the value of your money it is at risk. You can end up with less than what you've invested. I'm glad I got that one across, piece.
Yeah, yeah,
I,
yeah. I always say to people that it's a really difficult situation to find yourself in, and this probably leads us to the fact that we have had so many new investors in the marketplace. And I see it as it's actually one of the great things that has happened in the past, I would say, 3 years.
yeah.
The massive influx of like young people wanting to invest, wanting to look at that long-term picture for the future. It's happened in a period of time that almost felt like an unnatural market cycle though, because I was looking at some data today. I mean, we got the lockdown got announced. I think it was on March 25th, 2020. And when you look at some of the markets, you see massive growth between that March all the way up until the present. Really huge, huge growth. And I think a lot of new investors may have only experienced that per se. It may not necessarily be in this position where okay, markets do tail off. They do kind of go, there are recessionary periods within markets, but nonetheless, we still have more people investing. I think ultimately, for the long run, that's actually going to be a positive thing.
Yeah, listen, you and I, when we met a few weeks ago, this is how we got chatting about this whole notion that how brilliant in the sense of new people coming to the market to invest who had never invested in their life. And I'm with you. Trying to encourage investment inclusion, it's just such a brilliant thing. But let's look at that, because it is a powerful dynamic what happened in the period of time that you've just mentioned. So if we, and I've got most of the numbers I have are probably US, Pete, but the UK numbers aren't so dissimilar. But
Hmm.
pre-COVID, so in 2018, retail investors, that's you and I, made up about 15% of the volume of US equity trading.
Mm.
Fast forward November-ish 2020, retail investors are making up 25% of the
Wow.
volume. So that's a massive hike.
It's a massive
So
jump.
massive jump. It's phenomenal. And a lot of those investors are new investors. And, it got me thinking, what was it that, why all of a sudden, why did it take a pandemic, which, if you had thought there was a pandemic coming, your thought would be, oh my goodness, the world is about to end.
Yeah,
The
yeah,
last the last thing,
yeah,
we're going to be hunkering down in the bunker with the canned food.
yeah, 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 yeah,
Right? not
yeah,
not not looking at our mobile our trading accounts. So
yeah.
what happened? There was some phenomenal things that happened. And look, I'd love your input, but I've been trying to distill it. But I think basically what happened in that period of time, obviously you've got people working from home.
Hmm.
Um, but they had a little bit more cash, a lot of people, in the sense that they weren't spending the money. They
Yeah,
couldn't spend it. They also
yeah,
had some stimulus money coming through. So they had
yeah.
some stimulus. So they had a little bit of spare cash. And we had great advances in technology, specifically in relation to trading. So I'm talking about fractional trading,
Yes,
which was
that
massively
has
powerful.
been a massive game changer.
Brilliant,
I think
absolutely.
previously, when you started to look at individual stocks, and might have a look at, say, the Amazons of this world or the Teslas of this world, you know at the point where the stock prices were, once you start getting to like $200-300 a share, people start to look, hang on a second, it's a little inaccessible because you've got to save up to get one full share. Fractional shares coming along and being able to buy a piece of that one share, it's made a huge difference for a lot of people. It's made it a lot more accessible to people to get into the markets, and I think that's been a massive catalyst,
And
huge catalyst to it.
totally agree with you. And let's not forget commission-free trading, right? I
Yeah.
know it's been more of a US phenomenon, but prices have come down across the board. I think these investors were bottom fishing as well. I
Hmm.
mean, we saw that the market's been absolutely hammered in such a short space of time. So there was a sense of, well, there's some bargains to be had here. And then you had forums. You had social media forums like
Reddit.
Reddit.
Yeah.
We're not talking about Reddit, right, Pete?
It's interesting though because
Yeah.
watching that whole saga. I mean, when was it? It was 2020 back in
20, yeah, it
20.
was nuts, wasn't it?
Yeah,
I thought it's time for me to give up my job. What's the point?
yeah, because you look at it and it's like this online, and just actually speaking about AMC and GME,
Mm.
what they did and the frenzy that it caused is just, it's staggering. And just to know that from a social point of view, you're able to mobilize people in the pursuit of one specific thing, and everybody felt really, really focused, I thought was just absolutely incredible to watch. But at the same time, I was always watching the stuff that was coming out in the news, and it's certainly on social media here on YouTube, and sometimes pulling my hair out as well. Like, guys, please be careful, that kind of stuff. But it was certainly a catalyst for a lot of younger people being introduced to investing and even trading for the first time in a really exciting way that kind of garnered public interest.
Yeah, totally. I mean, you mentioned AMC there, but there are some other names, and I just had a quick look today to just looking at numbers. But if you remember a company called GameStop, that
Hmm.
reached as high as was $325 at its peak in
Yeah,
January. It's
yeah,
now trading at $129. That's 60% off its highs.
yeah.
Netflix, and I'm only mentioning these because they were the trades at the time. This is
Hmm.
not investment advice. I'm just
Yeah,
mentioning the names. Netflix, another classic. We all know Netflix. $690 high in October 21, now trading at $182. That's a
yeah,
70%. That's over 70% loss. I mean,
yeah.
so look, I, of the opinion that in one sense it's great that we have all these new investors. I feel sorry for them though, Pete, if this is the experience that some of them have had of individual losses on stocks.
Yeah, yeah. And this is one of the things that I always say
It's
on
a
the
pretty
channel.
hard pill to swallow.
Yeah, this is one of the things that I say on the channel because I'm always very mindful that, look, to a certain extent, I'm on YouTube. I don't like the phrase influencer. I hate it, in fact. But the reality is that, because I do talk about markets and so on and so forth, and because of my background and my experience, it is natural, I guess, for anyone who's just starting out to say, oh, if Pete did that, I'm going to go do that as well without necessarily doing the research. And I always try to make sure that and say to people, you need to do your own research. There are a number of factors that you need to understand just to put the foundations in place. Because my biggest fear for anyone who may have only just started to invest over the last, 18, 24 months when everything was all green and people are making lots of money is I would hate for you to get to a point where that's all you're expecting. The tide turns, and then through a series of maybe poor decisions from the outset because maybe you didn't do enough research and you just listen to people, the biggest memory that you have is I've had a massive loss of the money that I put into the markets, and then that puts them off for the future. And I guess that's where we do have responsibility and why our industry has compliance and all this kind of stuff that sometimes can be a little bit of a pain, but is actually quite important in terms of how information is shared and disseminated to people.
Yeah, I mean, sense of, financial education and investment education. Um, I do think there is a big difference, though, between being a trader and an investor. So my question would be to all these new
Yeah,
investors, which are fantastic. Are you trading or are you investing? Because there's a big difference. Um, if you're trading,
yeah,
then unfortunately you're going to see the wild volatility like you're seeing with a Netflix or an AMC or a GameStop, and that's fine if you've got the appetite for that volatility and potentially the risk aversion because it is a risky strategy. A big
hmm
difference then between being, as you know, previously being an investment a financial advisor, than actually being an investor. They're very different things.
yeah. I mean, the way I always explain this to people is, uh, it, one's for the long term, one's more kind of immediate. But I always say that it's a different kind of skill set and it's a different mindset. It's a completely different approach that you're taking to it. And the important thing is that depending on which one you choose, because one would suit people more than the others, and actually, I know a lot of people who do both, and that's completely
Yeah,
fine as long as it's the right decision for you and you know what you're doing. But
yeah.
it's important to make that distinction between investing and trading. And I feel as though certainly in the YouTube and social media space, those two phrases are used interchangeably. And I think again that's
Mm.
where it's a little misleading from a informational point of view to say that they're the same and they can be used interchangeably because when actually they can't. It's a different approach, different mindset.
Yeah, but listen, just on that, how do you then deal with the situation? I mean, I get asked all the time, "Oh, talk to me about Bitcoin, 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 Bitcoin," and the only thing I can really say about Bitcoin was, oh, $68,000 high back in November 2020 dollars.
Yeah.
Uh, Technology behind Bitcoin is phenomenal. You can't, in terms of Bitcoin being an investment strategy. Over to you, Pete. Is Bitcoin an investment strategy?
So I've struggled with that question, and I follow obviously a lot of social media and a lot of the crypto content. I think what I've always said to people is that number one, recognize it for what it is. It's new. It's new technology. It's
Yeah,
very exciting. What it's built on, the blockchain is phenomenal. It's got the potential to change
absolutely.
everything. Bitcoin
Hmm.
is probably the oldest of all of them. So I guess that's the allure for most people. It's been interesting to watch some of the developments around trying to get a spot ETF for Bitcoin, which the regulators in the States really haven't warmed up to. They're kind of like, okay, we might have a look at it, then they didn't. So they obviously authorized some futures ETFs, which are completely different. It's not the same as a spot price ETF. But interestingly for me, though, what I found is that, for the longest time, the conversation around Bitcoin was that it was going to be this non-correlated asset. So you might see if equities
Mm,
go down, more people flock towards Bitcoin and cryptocurrency as a safe haven, a hedge against inflation. We haven't seen that happen in reality. And part of me thinks it's because you cannot underestimate human emotion and human reaction to recessionary or bad news when it comes to the markets as a whole, and the need
yeah,
for people to, I guess, flee to safety or a sense of safety when they have their money on the line. And I think that probably leads very
absolutely.
nicely onto things like, loss aversion. Nobody wants to lose
Yeah,
money. So if it gets a little
yeah.
too hot in the kitchen, we're thinking, okay, maybe I just cash this in and just keep it and stay safe and take the hit of that loss. Is it the right thing to do? Well, based on your personal circumstances, it might be. But I think with Bitcoin, it's been interesting to see that it hasn't necessarily been that safe haven that people have always expected it to be, or that hedge against inflation, given where we are right now.
Yeah, I mean, I suppose the conversations I've had with around crypto in general, actually, a lot of people really do feel that it's the future of, the currency of the future. That's the money. It's money, and I've always opposed that thought because for me, money is something that I can spend easily. It's a medium of exchange, right? I can't at the moment, in all good faith, in crypto freely. It's just not possible until I can go across the shop and buy my liter of milk in crypto. Until crypto is not money, store of value. I mean, brilliant point earlier there, Pete, about people buying crypto on the notion of it being an inflation hedge, and it was the gold of the 22nd century, apparently. Now that's clearly been debunked. But look, the technology itself really, really excites me. And I might maybe just come back as well in terms of the growth of tech and looking at the future. But the other point that I wanted to raise, and I think it's really, really important, you mentioned loss aversion. And one of the areas of study that I would love to do a little bit more on. So economics is my undergraduate degree. I've done a little bit of research and study on behavioral economics, and I'd like to
Hmm.
do a little bit more. But behavioral finance just fascinates me, and there's so many different aspects to that. But from an investor perspective, what's really important for you to be aware of is your personality type, and within
Mm,
that is this notion of loss aversion. So basically, loss aversion is how you perceive a potential or a real loss, and that you're perceiving that to be emotionally more severe than a gain,
hmm.
so that
Hmm.
you put more emphasis rather
Yeah.
than gain. And
Yeah.
uh, so give an example. Let's say the pain of losing £100 is greater than the joy of gaining £100. And it's like, and it's true. I've seen this time and time again.
Yeah.
Pete, I have worked with clients who, we worked on an investment plan, um, we put it in place, we executed it, it was doing its thing, and next thing we had a recession and a bear market, and in the middle of the bear market, they just want to sell.
Yeah.
A lot of people, and it's this, psychologists say that this sort of loss aversion, this pain of losing is twice as powerful, relative to the joy of winning. And you think about that for a moment, because from an investor perspective, if that's the case, that means we're all irrational investors.
Yeah.
And we're gonna make bad decisions. Bad decisions like we're gonna hold on to stocks for too long,
Hmm.
or we're not going to hold on to them long enough, as the example I just gave. It's it's really interesting stuff.
I have seen it as well. I mean, even as when I was advising, as you say there, you sit down, you draw up a strategy, and it's working, and you have annual reviews, and you're up 5 or 6%. It's great, it's fantastic. Second year, similar kind of thing, and you have one bad year, and it's -2 or 3, and that one year is the point of reference. I've lost X amount of money, but it's like, okay, but hang on a second, we need to zoom out. On a 3 year journey, you're still up overall. But again, it feeds back to what you're saying there. A lot of people I think it's because we're so emotionally attached to the fact that we have to go out and actually earn money. And it's oftentimes a lot of work that we get it, and it's like, okay, it's good that I've got it now, but I don't want to lose it. And I
Yeah.
how you override that from a natural point of view is very, very challenging. I always talk to people, and this
Mm.
is why I talk about it so much on the channel, is, you know, what are you doing this for? What is your why? What's your goal? If you can really tune into that, maybe not overextend yourself in the acknowledgement that, you know, probably will make bad decisions along the way. Those are key little pointers, I guess, that I found people tend to cue into and are now helpful.
Yeah, and I agree, Pete. And I think also there needs to be a recognition as well when you start your investment journey. There has to be this acceptance that, look, at some point along the way, I'm going to lose money. You're investing in assets that are volatile, and that is the case. But one would assume, or certainly there's a lot of data that backs this up, that over time, there's this saying. I'm sure you've heard of it. You heard it in your early days. I'm sure
Mhm.
it was RBS, was it, Pete?
RBS, yeah,
RBS,
RBS. I
RBS,
was
yeah,
I
yeah.
was with it originally. Yeah,
I'm sure you heard this. It's sort of time in the market, not timing the market. We've
absolutely.
all heard that, right?
Yeah,
Um, and it's easy again for us as on on your channel saying, oh, you should be more rational and less emotional. If I
it's
had a
so hard to
pound
do
for
though.
every time, if my
It's
husband,
so hard
if
to
I had a
do.
pound, Pete, if I had a pound for every time my husband said that. No, but listen, there is a way though, genuinely. I mean, you spoke about making a plan back in the day when you used to manage money yourself, sitting down with the client, ascertaining what their goals were. But that is one way to sort of mitigate this sense of loss aversion. Have an asset allocation, have a strategically asset allocated investment plan, and stick to it. Of course, you're going to have to rebalance along the way, but you're doing that, or a firm, you're dealing with a digital wealth advisor. I'm not going to say the name because that would be
Mhm,
overtly. But look,
mhm.
there's lots of options out there. You do it yourself, or you can engage with lots of firms to help you do that. But if you do that, you're giving direction to someone else, and therefore you're less emotionally involved. And I think that helps. I mean, certainly, I know from my own sense that helps. So even though I do this for a living, I also, my pension, that's managed by someone else, right? And that's good, because otherwise I'd be picking up the phone saying, "Why aren't you doing this? Why aren't you doing that?"
Yeah, this is the thing though. I always find that it's very, very hard to remove emotion from the money. I mean, even
Yeah,
myself, I look at what I've done recently is I've just turned off all my notifications. I don't want to know, because I'm like, okay, look, the markets are down. I
yeah,
don't need to be notified every 5 seconds that this stock is up, this stock is down, or whatever's going on. I've kind of sat back and I've accepted it. And I know that it's part of the cycle at the end of the day. And, in the long run, according to my plan, my strategies, it should be okay. I should be okay for the future,
yeah,
but it's hard still. I still have to find myself having a conversation with myself, reminding, okay, listen, this isn't about the next 2 3 months. It's actually about the next 5 6 7 10 years, and this is a bump in the
yeah,
road in mile 3 of a 100-mile journey. So don't
yeah.
get too emotionally invested in what's going on right now. But it's hard to do. Have you got your connection there, Colleen?
Yeah,
Oh,
sorry,
Colleen is
just
still.
lost you there for a bit,
Yeah,
Pete. Can you hear me?
yeah, yeah. I can hear you now. Yeah.
Excellent. Look, yeah, absolutely. And the other thing that sort of is interesting is this sense that if you look at technology, and I know technology in particular is taking a bit of a pasting at the moment. And the reason for that, by the way, I mean, we did sort of high level mention markets earlier, but let's maybe just quickly back, Pete, in terms of year to date. So most markets year to date are off, but particularly any markets with big exposure to technology. So
Tech,
Nasdaq,
yeah.
for example, yeah, it's interesting. The FTSE, because it doesn't have so much tech exposure, is probably one of the better performing markets. I mean, I think it's only down about 2.5% year to date.
Hmm.
Um, but reason I mentioned tech is because technology shares right now and growth companies in general are particularly being impacted by the notion of raising interest rates. And
Hmm.
that comes back to the fact that in terms of how you value growth stocks, so rising interest rates are not good for growth stocks. But the one thing I would say is, we have been here before. We had a dreadful situation with technology shares in 2000. Um, and I guess all I'll say is as a result of my experience is that, you know, the innovation and the ability for human beings and the ingenuity there is phenomenal. I mean, if you look at the fourth industrial revolution, what's going on with Web3, AI, even the technology that's being developed at the moment around carbon neutral, trying to take carbon out of the atmosphere. Pete, it's phenomenal. I mean, there'll be
Mm.
companies now that we haven't even heard about that will be the stars of the next 10 years. And I am
Yeah.
a big believer, and I always like to sort of end on a high note, but growth very much is the norm. But there's going to be some bumps along the way. That's back to the sort of the point on cycles, no more than there being recessions, technical recessions, that is, every 10 years or so. So we have bear markets every couple of years. I mean, obviously, I don't know if we're going to have a technically in bear market situation across the board at the moment. A bear market, just for viewers, is a market that's fallen more than 20%. We're not technically in that situation with most indices, Nasdaq aside. So I mean, I don't have a crystal ball. All I know is, you know, um, things will get better. Storm clouds on the horizon for sure, but things will get better.
Yeah, and I will completely agree with that. I think the most important thing here is to hopefully just if you are investing, just bear that in mind. We're in for a little bit of a rough run, I would say, in the short to medium, well, I'd say immediate future. But ultimately, I think long term we'll be okay. And this
Yeah.
is just these are the cycles of the market. Unfortunately, a lot of this is going to be down to, are you able to remove that emotion from the decisions that you're going to have to make, whether you're going to hold the markets or not. That's going to be a really important factor. Really cueing into, why did you start this journey in the first place? Remind yourself of that. I mean, it may sound arbitrary and very I guess, boring a point, but I think it's a really, really important point to make, because if you ask Usain Bolt why he would put himself through all the training regime that he did, you know, I bet you he would have said, I want to be the quickest, the fastest man on the planet. And keeping those records and breaking those records would have spurred him on. It's kind of exactly the same thing. There's a lot of psychology within
Yeah.
this and what you're doing this for, so on and so forth. I mean, for
What
you, if
what's
you could
that
go back 20,
expression, Pete?
go on.
Sorry, I was going
which
to say
which
what's
expression?
what's that expression? What's it, the it's not a sprint, it's a marathon.
Yeah, yeah,
That's
absolutely.
that's where I feel right now.
Yeah, absolutely. And that is very, very true. It isn't about the immediate, thing that's going to happen. And, I talk a lot on the channel about, making sure that you understand those fundamentals, how long you're looking to invest for, the risk that you're willing to take within that mindset. All of that is so important now. And just bearing in mind that it is a marathon, it's not a sprint. So just bear that in mind. I was going to ask you, Colleen, if you could go back 25 years
Yeah,
and give your younger self
my time
any piece of
machine.
advice around, yeah,
Yeah.
what would you say?
I would probably say a few things. First of all, if I was going back in my time machine, Pete, can I buy stocks if I go back in my time machine?
Oh yeah, 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 yeah,
No,
yeah,
no.
yeah. Of course you
Oh,
could.
okay, I'm not allowed to do that. Google, Google,
the
Google. No,
sports,
no.
the
Okay,
sport,
okay,
the sports almanac. I always say to people, if I
okay.
had the sports almanac, we would all be billionaires and trillionaires. But it doesn't
Yeah.
work like that, unfortunately.
No, unfortunately not. So listen, I've definitely learnt a lot over the last 25 years. I think the an early lesson for me was, it's all very well and good what you learn in school and university. It's very different in real life. So, and I
Mm,
and I and I sort of go back to the textbook theories of the various economic strategies that I learned about and wrote essays on, and how does that actually work in the real world. I'd also tell myself to have a lot more patience. We're very impatient, and it's not just me. This seems to be probably an attribute of many of our generation, and certainly more recently. I don't think technology has helped that. We want things
true,
instantly.
true.
And then the probably though, from a philosophical basis, and I remember reading this a little while ago, and it really really resonated with me. But it was not, let me think if I can recall this properly. Not everything that matters can be counted, and not everything that can be counted matters.
Mm,
And I really liked that, because really what it's saying, Pete, is
mm,
keep it real. Keep it real. Look at the big picture. There's a lot going on, and just with a lot going on, and I'm not on my sermon or my soapbox right now, but we really do. I know things don't feel great at the moment, and I think the media certainly has a big role to play on that. But the reality for many is that, for many of us, we've really never had it as good as we have it right now. And that's not everyone. Listen, there's some shocking things going on. I mean, the cost of living crisis is very real. Um, but for those that doesn't impact, Pete, we got it pretty good.
yeah.
We're not stuck in the middle of a war zone right now.
Yeah, I mean, it's a really good point that you make there, and often I try to make this point from my own personal experience, and sometimes I have to think about how I word this in the best way possible. But sometimes there isn't a correct way to word it. With my background, my parents are Nigerian, so I lived out in Nigeria for 10 years. And
Okay.
in Nigeria, if you find yourself in a situation like this, there isn't a state to assist you in any way,
Yeah.
shape, or form. And I think many people won't experience that. But when I look at it from my experience, I'm kind of like, okay, no matter how bad it gets, no matter how bad it gets, and bearing in mind, I have been homeless, the state helped me to a certain point to get out of homelessness, because I went from being homeless into a hostel that allowed me
Wow.
to then get into rented accommodation, so on and so forth. I am aware of the difference in society. So I personally, when I look at this kind of stuff, I'm like, yeah, it is bad, and maybe there needs to be more done from a governmental point of view. And yes, I guess the press, because it is about selling bad news. Bad news sells, I guess. I always look at it with the context of, I'm still extremely grateful for where we are right now. Because, like you said, we're not in Ukraine, and we're not having to deal with that kind of situation. So, whilst everything is really, really bad, I think it is really important for us to also be grateful for the things that we do have currently, that many people would kill to be in
Yeah.
receipt of. And I think I asked a question on Instagram a couple of months ago. I said, does anyone practice gratitude? I do all the time. I have to
Mm.
look back over my journey and think, okay, so even if I'm in a really bad spot right now, where was I 5 years ago? Where was I 10 years ago? If I went back and told myself
Yeah.
10 years ago that I'll be doing this, would would 10 year me from 10 years ago be like, wow, dude, you've done so well? The answer is yes. So I have to be grateful for that. And I think that's really, really important for,
Wow.
for people to, to do.
So let me this, Pete, then. So interesting. Do do you then compare yourself relatively to others? Because I think that's part of the issue as well. We feel our own sense of worth relative to others. And for you, you've just explained it neatly, that it's your own perspective and it's your own experience. I think that's the right way to do it. But I wonder, is that what most people do? I mean, do you look at yourself sometimes and say, well, where am I relative to my peers as opposed to where I am relative to myself 20 years ago? Because I think that has a big impact on people as well.
I think it's a little bit of both, really, to be fair. And look, I'm aware that my outlook on life is very, very unique.
Mm,
Um, because one of the biggest things, and even when I was in Canary Wharf, my manager, Rich Horner, if he watches this, and John Scannell, they'll know that one of my biggest drivers in life is opportunity
mm,
and being aware of the opportunities I have and trying to maximize the opportunities that I have. And with that, I can take into context where I've come from and
mm.
where the people around me in those times are right now. So, for
Yeah.
example, I'm the last of four boys. I'm the only one in my family who was lucky enough to be born here in the UK. So I was born with a UK passport as just, well, it's luck. It is
Yeah. Yeah.
sheer luck. My three older brothers, they don't have a UK passport. They have Nigerian passport. So they don't have any rights in this country. They can't come here. They can't work. They're not eligible for any benefits, nothing. I happen to have that through no effort, hard work of my own. It's pure luck. So when I talk about opportunities to people, and I speak about this to young people a lot, I say try to understand what opportunities you have, because the reality is that I would trade places with any of my brothers if I failed to take advantage of opportunities that I had available to me. And I've been very, very lucky. And I'm not just
Yeah.
lucky because luck just happens. I've worked very, very hard. So I'm always mindful of that. But even the things that I'm doing now and doing a little bit of TV and doing Lorraine, if I went back 10 years ago and I told myself that, I would have been like, no, it wouldn't happen. And so I'm very
Yeah.
grateful for that. And that gives me, I guess, an outlook for the future to know that no matter what happens from here on out, I've still done very, very well
Yeah.
compared to where I was, especially where I was 20 years ago in Nigeria, in the middle of a bush, hoping
Wow.
and praying, fantasizing for 3 years about getting on a plane to come back to this country. So
Wow.
I understand the journey that I've been on. And I'm
Yeah.
appreciative of that. And that's really my main driver in
Yeah.
everything that I do. I started this to have conversations with people that I wish someone had with me when I was in my 20s, is to help and to educate people, really.
Yeah. It's brilliant, Pete. I mean, as I said before, I mean, shows like this is what it's about. And we need more of them, especially, as we help this new generation of investors. It's, all credit to you. Well done.
Thank you. Cheers, Colleen. And thank you so much for joining me here. I know that
Yeah,
Edna
pleasure.
and a few people are on here. There were about a few people. And if you're watching this on replay, by the way, thank you so much for watching. We really do appreciate your time. Look, we do know that it's going to be a really, really difficult and bumpy road moving forward. Um, as I always say on the channel, though, I think ultimately you do need to kind of think that long term picture and understand your why and the reason why you're doing all of this. Um, and hopefully, you're taking risk and investing in the market, having had a plan in the first place. And if you are the kind of person that's just jumped in and you've been, I guess, swept up with a lot of the hype that happened in 2020, that's okay. That's cool. That's fine. Maybe now's just the time for you to refocus and really think about the strategies and what it is that you want and how the markets and investing could help you get there. As all things, there is no one way to do anything, and nothing is I guess, a silver bullet to solve any problems. But the only thing we can do is we can control the things that are within our power to control. And a lot of that is around the decisions that we make, the mindsets that we have, and how we approach and the decisions that we make. And I guess that's really the thing that I will leave everyone with this evening in terms of this stream. But as always, I'm sure that people will leave comments and questions. I normally get a lot of questions on Instagram. We've been streaming this as well live to Twitter. So if you're watching on Twitter, if you do have any comments, obviously do let us know. I hope you've enjoyed it. But Colleen, thank you so much for
No
joining.
pleasure. And Pete, I'll just finally say that I thank you because apparently you've helped my cred amongst my two children. They
Oh,
they
that's
sud
good.
they suddenly think mum is cool now that I've been associated with a YouTube video. So thank you,
uh,
Pete.
no, that's great. Thank you. Cheers, guys. And thank you so much for watching. Appreciate you. And look, whatever you do, have an amazing week coming into the week. Remember, money is a tool, life is for living. I will catch you next time. See you later, guys.
Bye.